Good afternoon. This is the India Deep Brief for Monday, 17th August 2026, with verified context across India, Gujarat, GST, business, markets, technology, international affairs, energy and sport. We begin with markets. Global shares were mixed on Monday after weaker United States economic data revived concerns about stagflation, the difficult combination of slower growth and persistent inflation. Oil prices slipped, while major Asian markets moved in different directions. For Indian investors returning after the holiday period, the immediate signals are foreign portfolio flows, the rupee, crude oil, global interest rate expectations and corporate earnings. A sharp opening move should be treated as a reaction to accumulated information, not as a complete verdict on the economy. On GST and tax, no fresh nationwide GST rate change was confirmed in the latest official material reviewed for this briefing. Businesses should continue to distinguish proposals and viral claims from law. A rate or procedural change should be acted upon only when supported by an official notification, GST Council communication or verified portal advisory. The larger GST story is scale and formalization. A government backgrounder says the number of registered GST taxpayers increased from about 66.5 lakh in 2017 to roughly 1.65 crore by May 2026. Gross collections rose substantially over the period, and collections in April and May of the current financial year were about 4.37 lakh crore rupees. A broader base can support revenue and transparency, but it also makes simple filing, stable technology, fair audits and predictable dispute resolution more important. For Gujarat, the state budget provides useful economic context. Gujarat's gross state domestic product for 2026-27 is projected at about 33.25 lakh crore rupees, implying nominal growth of 11%. The budget targets a revenue surplus of about 25,587 crore rupees and a fiscal deficit equal to 2% of state output. State GST is expected to remain the largest source of Gujarat's own tax revenue, with a budget estimate of about 80,127 crore rupees. Those numbers matter because Gujarat is deeply connected to manufacturing, ports, chemicals, textiles, engineering, dairy and exports. Strong headline growth still depends on execution, reliable electricity, water, roads, port capacity, approvals, skilled workers and access to finance. Monsoon disruptions can quickly affect factories and logistics, so businesses should continue to follow district-level weather and transport advisories. Across India, the same execution test applies to infrastructure and industrial policy. Announced investment does not automatically become productive capacity. Projects create lasting value when they move through land acquisition, financing, construction and commissioning, then operate competitively and generate domestic value addition, skilled employment and exports. Artificial intelligence is a clear example. India's AI ambitions require more than software models. They require data centers, dependable power, cooling, fiber networks, specialized chips, cyber security and trained people. The opportunity spreads across construction, electrical equipment, telecom networks and digital services. But rapid expansion also brings risks involving energy use, privacy, safety, accountability and debt-funded projects. Human-centered deployment means measuring whether systems improve real outcomes for citizens, workers and businesses. Energy remains India's most important external vulnerability. Oil prices slipped in global trading today, but one quiet session does not remove structural risk. India imports most of the crude it consumes. A new supply shock, shipping disruption or sustained price surge could widen the import bill, weaken the rupee and raise costs across transport, manufacturing and household budgets. Oil therefore connects overseas geopolitics directly to Indian inflation and corporate profitability. Internationally, European and Asian markets were mixed. Japan reported annualized second quarter growth of about 1.1%, slightly better than expected, although private spending and investment were flat and export growth slowed. Hong Kong and mainland Chinese equities advanced, while some European indices were little changed or lower. The broader message is that investors are balancing softer growth signals against hopes for supportive policy. In sport, India built a commanding first-innings position in the opening test against Sri Lanka at Galle, reaching 460 for 9 by the end of day 2 according to widely reported match updates. The series is part of the ICC World Test Championship. A large total gives India control, but the next challenge is to use scoreboard pressure, adapt to a surface expected to favor spin and take 20 wickets. The difference between a strong performance and a valuable championship result is conversion. The takeaway for the next 24 hours is to watch the Indian market response to global signals, foreign flows and the rupee, Gujarat's local weather and logistics, verified GST communications, crude oil and shipping, the quality of AI infrastructure execution, and day 3 in Galle. This is Good Thoughts. Thank you for watching and stay informed.